Representing one of relatively few leveraged buyouts this year, private equity firm Vector Capital Management said on Monday it would buy the maker of graphic creation technology, ChyronHego. I'm Sarah Pringle with The Deal, and I'm here with my colleague, Bob O'Brien, who's been following this trend. So Bob, tell me a little bit about the Chyron deal and what makes it so unique.
Well, Sarah, it's one of the very few true LBOs that we've seen take place this year. And by LBO, you mean that kind of classic public to private model where a PE firm takes a publicly traded company and puts it in among its portfolio companies. So not a big premium on this deal. It was a relatively inexpensive stock, trading for less than $3 a share.
Okay, and so is the private to public model completely dead at this point? And what factors are really deterring these type of transactions?
Well, so, you know, if you look at it in the classic sense, of the classic definition of a public to private transaction done by a PE firm, then yeah, there's not, it looks as though it's dead. I mean, we've had this robust M&A market, but there's only been $5 billion worth of big LBO deals this year. That's a fraction of what we did in 2013. So on the face of it, it looks as though it's kind of dead. And the reason is simple. It's prices. As Leon Black said, pricing is the single best determinant of investment performance.
Okay. And so that said, what are we seeing LBO transactions replaced with?
Well, we're seeing a lot of other deals. They're carve-outs from big publicly held companies, or they're private to private. We've seen a lot of sponsor-to-sponsor deals. You've also seen just a rash of transactions in the middle market and below, so they don't have that sort of epic quality to them that we saw in previous years, but there's still a lot of transactional activity taking place. It's just taking place at the low end of the spectrum.
Great. Thanks a lot, Bob.
Thanks,
in New York, I'm Sarah Pringle with The Deal.